Another episode of the Bootcamp. Today we're going to be talking about how to actually place a trade. Now you might have experimented a little bit already by yourself, but I'm going to go into a little bit more detail on how to place market orders, limit orders, and just kind of set up TradingView so that anytime you want to place a trade, it's a very smooth experience. Okay, so to get started, you're going to go up to this trade button right here at the top. You're going to click trade. Now, this is going to give you your full selection of all your brokerages. So if you use Trade if you're trading through prop firms or whatever, you can click one of these. But for now, we're just going to do the paper trading. So as long as you have live market data on TradingView, this is going to work. So we can click this and just press connect. So now this is going to bring up the order panel on the right side. And this is where you're going to be executing all of your trades. You might see at the top right here that I have these buy and sell buttons. The way you can add that is just right click on the chart, click settings, and then you see this buy and sell button. You can click this. It either adds it from the screen or removes it from the screen. Another thing that's important is if you go back into the same setting, you can enable one-click trading. So what this does is it instantly places a trade rather than bringing up that order panel. And it also doesn't ask for a confirmation before adjusting any of your order settings. So for now, we're going to keep that off, but I'll show you what it looks like when you turn it on a little bit later. So now going back into the trading panel here, we're going to start by placing a market order. So what this does is it gets you in whether you're buying or selling at whatever price it's currently trading at right now. So it's basically, I want to get in right now and not at a specific price. So what that's going to look like is you click market right here, and then you click buy or sell. So before you place a trade, if I want to go long, I click buy. And then this is where you put in how many contracts you want to trade. You could put in 10, you could put in 5, whatever. Right now, we're just going to do 1, but that's going to be 1 contract. So for example, we're trading micro NASDAQ futures. So for every 1 point, it moves $2. So when we're in 1 contract, it's going to be $2 of movement. If we had 2 contracts, every point's going to be $4 of movement. If we click buy right now, there isn't going to be a stop loss or take profit added yet. So it's just going to put us in whatever price it's currently trading at. So this is what it's going to look like when you place a market order. So this is going to be your active P&L right here. So every point that it moves, it's going to fluctuate. This is the price that you entered at right here. So sometimes there's going to be a little bit of slippage, so it might not put you in exactly where you thought it would, where the candle closed or opened. So now in paper trading on TradingView, it allows you to drag the take profit and the stop loss. So you can click this and drag it to the amount that you want to take profit at. So let's say we do like 150. We can set it to $150 and then click confirm. So this is the one-click trading thing I was talking about. So when you have it disabled, you have to confirm anytime you make an adjustment to your order. So now once price hits this level, it's going to close the order. And then you can do the same thing, drag your stop loss to 150 and then click confirm. And that's going to take you out of the trade when you're down $150. Unfortunately, when you're not taking trades through paper trading on TradingView, you can't drag the stop loss and take profit like this. And also, if you want to close your order and cancel it, all you have to do is click this, and this closes the position and removes the take profit and the stop loss. If you wanted your take profit and your stop loss to be placed automatically without you having to drag it, all you have to do is when you place this order, check these off and then type in how much you want the take profit to be and then how much you want the stop loss to be. So this is going to automatically create a bracket order. So it'll place your take profit at $150 and it'll place your stop loss at minus $150. So I only place market orders because of the strategy that I do trade. I want to get in as quick as possible. But some strategies also use limit orders too. What a limit order does is it gets you in at the exact specified price that you set it to. So if I wanted to place a limit order and I wanted to get in at an exact price and not at the current price that the market's at right now, I click limit order and then I click how many contracts I want to trade. And then I can drag this limit order at whatever specified level that I want to enter at. So if I put it here and click buy, it's not going to activate this order until price comes up and hits this level, and then it gets me in at this exact price. And then the same thing works. You can set that take profit and stop loss after, just like this by dragging it, or set it up so that it automatically places a bracket order and have your take profit and stop loss set already. So now another way you can place a trade is by right-clicking on the actual chart and then clicking buy limit or sell stop. What a sell stop is it's almost like a limit order, but instead of it getting you in at that exact price, it activates a market order, so it just gets you out of the trade no matter what price it is once it hits a certain level. And the reason why that's good is because if you have a stop loss, you want it to just get you out instead of risking it not being filled. For example, if it wasn't a sell stop and price came down and it was setting a limit order, then it might not get filled if we get crazy displacement through that level. You want it to just get you out no matter what, even if it's a little bit lower than this level. So you can right click on the chart and press sell stop and then sell. And then when price gets to this level, it's going to trigger that and get you out of the position. So typically you're going to do that after you already enter. So for example, if I click buy one contract, that's going to get me in right now. And then if I right click here and I want to place my stop loss below this low, then I click sell stop and then sell. Now that's going to create my stop loss right here, exactly as if I was to drag this stop loss from this position here. So if price came down here and hit this level, it's going to get me out of the trade. Now you might notice when you right click the chart here, it's going to come up as a sell limit. So the reason for that is because for your take profit, you want the price to be filled at the actual level. So when price comes up and taps this, you want it to sell at the highest price possible. You don't want it to come up, tap this, and then come down, and then it fills a market order and gives you a worse fill, because you want your profits to actually be maximized instead of it filling somewhere lower and you making less money basically. But like we said before, a limit order gets you in or out at the exact level that it's set at. And a sell stop activates a market order so that it just gets you out at whatever price the market is currently at. And then as you can see, if we place a short position, so we do a market order to sell one contract, this is gonna flip. So when we go to place the stop loss, it's now gonna be a buy stop because we're buying back that contract. And then it's gonna be a buy limit at our take profit. So one thing you got to keep in mind as well is when you do close a position, when you have these buy stops and buy limits set, there's still going to be open positions when you close that order. So you want to make sure that you either click the flatten all button, which comes up on some brokers, or you just manually close them out like this. Because otherwise you might have won your trade and you still have a buy stop or buy limit open, and it'll activate that and either buy or sell a contract when you don't want it to. So make sure you flatten your entire position when you're done trading. Some people leave it open. They'll have a limit order set like this and they forget to remove it and they close TradingView. So it could activate this when you're not even on the charts and you could lose a ton of money. So make sure you always cancel these and close them out. All right, so now I'm going to show you what it looks like when you remove that one-click trading. So for example, if we do like a market order and just buy one contract, every time we drag the stop loss, it's going to tell us to confirm, right? And we drag the take profit and it asks you to confirm every single time. Some people might like that just in case, so you don't accidentally move your take profit or stop loss. But if you want it to be a little bit smoother so you can make adjustments faster, just click one-click trading here in the settings and click OK. Now I can just freely drag this without the confirmation window coming up. And the same goes when you actually close your order too. If you click this, it just automatically closes it and it doesn't ask for that confirmation. Sometimes when you have crazy displacement and you're trying to get in and out as quick as possible, you don't want to have that extra confirmation because it could cause you to lose money. But if you'd like to have that extra security without accidentally adjusting your order, then it's good to have. So that also works as well for these buy and sell buttons. So if you remember before when we clicked this, it would open up the trading panel and then you had to click buy. But with the one-click trading selected, you can click buy and it automatically triggers a market order and gets you in. That way you don't even have to have this trading panel open. And then you could also come in here and create presets so that it automatically does a bracket order. So let's say we have this selected and we click buy, it creates that bracket order automatically. So then you don't have to have the trading panel open at all, and it automatically sets this so your stop loss and take profit are set. And then of course the same thing goes for sell. You can click sell here and it automatically triggers a market order and you'll be in right away. Another thing that you need to know as well is this right here is how many contracts you're going to be buying or selling. So you can quickly press either one of these to add or remove contracts, or just click this and you can type in how many you want. And then now when you click buy or sell, it's going to get you in with that many contracts now. All right, so now I'm going to show you how to use the position tool. So this is going to be super handy to know how many contracts you want to use in order to risk a certain amount. So let's say we're going long here, right? If you click this position tool, which you can find on the side here, you just go here and then click either long or short. So we want to have the long position tool set if we're going to be going long. If you double click on the position tool, it'll open up the settings. Now you don't have to worry about the account size, and then the lot size you can leave at 1 and it automatically sets it to whatever asset you're trading at. So if you remember, we were saying before, micro NQ or M and Q is going to move $2 per point. So that's what this lot size is. When you set it to 1, it just sets it to whatever that asset's price movement is, basically. You don't have to worry about it. Just keep it at 1 and it's good. Now, this right here is where you can select how much you want to risk. So you could do it by percent. So that's going to take a percent of your account size. So that's when it's going to be important to actually set what your account size is. Or you could just do USD, which is the specific amount you want to risk. This is what I do. It's the easiest way to do it. So let's say I wanted to risk $500 per trade. Now, when you go to the position tool under the quantity section here, it's going to say 2.3. That's going to tell you how many contracts that you need to buy in order to risk $500 on the trade. And now that's going to change depending on where your stop loss placement is. So now, for example, if we wanted the stop loss to be placed at the bottom of this swing low here, we would have to risk 1.5 contracts in order to be risking $500. So that way you don't have to do any math in your head to figure it out. This position tool tells you everything. So of course you can't risk 1.5 contracts. So you'd either have to round down or round up. And for example, if we were to drag it and we wanted the stop loss right here, we would need to buy 2 contracts in order to risk $500. So how this math actually works is this right here is your entry point on the position tool, this line. So if we entered right here, that means our stop loss is 125 points. And as you remember, each point is $2. So if you multiply that by 2, we're at $250. But because we have 2 contracts that we're risking, it's $500 of risk. So 125 points times $2 per point is $250. Times 2 contracts is 500. So that's the math you would have to do if you didn't have this position tool. But because we have this, it tells us exactly how many we have to trade without doing any math in our head. So the same thing goes for the take profits. For example, it's going to tell us the risk to reward. So what this means is because we have $500 of risk selected, that means if this is set to 1, that means we're risking 500 to make 500. You can see these boxes are the same size because they're equal. If it was set to 0.5, that means the take profit would be at $250 and the stop loss would be at $500. So you're risking 500 to make 250. Now, most trading systems, you want to have at least a 1-to-1 risk to reward, which means you're risking 1 unit at whatever it's set to. So in this example, it's $500. So you're risking 500 to make 500. That's what 1-to-1 risk to reward means. And now a 2-to-1 risk to reward, which would be up here. This means we're risking 500 to make 1,000 because we're risking 1 to make 2, risking 500 to make 1,000. So now what is this actually going to look like when we place a trade? Let's say I wanted to place a short position right now. We're going to come open the trading panel or click it right here. We're going to set up our position tool. It's already going to be preset to how much we want to risk. So we know we're going to be risking 500 no matter where we set this. So let's say we wanted to have our stop loss here. We're going to place this above the high, and then this is going to be wherever we enter at. And then this is going to be set at whatever price we're targeting. So now in order to risk $500, we have to sell 6 contracts. So we click 6 here and press sell. And now it entered us right here with a market order. And when we drag our stop loss above these highs, we're risking 500. And then when we drag it down here, it's going to be whatever our take profit is set at. So now, of course, because it's a market order, it's going to get us in at whatever price it's currently at. That's why there's a little bit of a discrepancy here. So then you just drag this box to wherever the actual entry price was. And then this is going to tell you what your risk to reward is. So it's 2.78 and our stop loss is 42 points. Now we know every single time how many contracts we need in order to risk the amount that we want to risk. This is super important for risk management. You want to know exactly how much you're risking on each trade. So now if we bring our take profit to right here, it's going to trigger it once it hits that level and get us out of the trade, just like that. So because I dragged it up, that risk to reward was 0.67, which is less than 1, so it's not ideal. So that's really all you need to know in order to be able to place trades. Depending on what broker you're using, this is how to place them through TradingView. But if you're using TradeView or some other broker, most of them are going to look pretty similar. It's going to take a bit of time to be able to learn exactly what to do on each broker. But for the most part, once you understand how to do it on one, it's going to look relatively similar when you go to place a trade somewhere else. Most people are using TradingView, so that's why I used it for this example. But TradingView makes it super clear and easy to understand. That's why it's nice. Like I said before, most of the orders that you're placing are going to be market orders because we usually want to get in at the current price that it's trading at. So most of the time, you're just going to have this selected right here, the market order, and then you could just buy and sell however many contracts you want to use. So that's going to be it for this video. If you want more information, you can join my free Discord. There's a link in the description below. You can access my free trading journal as well as my displacement model checklist. It's also a cool community that you can be a part of. So take a look at that if you're interested, and we'll see you in the next video where I talk about candle anatomy.